I would like to welcome the management of Voltas Ltd and thank them for giving us this opportunity to host the result earnings call. I would now hand over the call to the management for their opening remarks. Over to you, gentlemen.
Good evening, everybody. Analysis of results quarter ended 30th June 2018. The macro picture. The global growth outlook for 2018 remains positive despite some recent softness and is projected to reach 3.9% in the year. Spillover risk from advanced financial markets have increased. Tightening of liquidity conditions in the developed markets alongside expansionary U.S. fiscal policy and a strong U.S. dollar have started to adversely impact emerging market currencies, bonds, and capital flows. Fluctuating commodity prices, evolving geopolitical developments, and rising protectionist sentiments pose even more risks and are adding to uneven growth prospects among emerging economies. Effect of trade war is already visible on China's yuan, as seen in its recent fall. The Middle Eastern economies are picking up pace owing to the uptick in oil prices, which augurs well for our international business. On the domestic front, while economic growth is firming up, conditions that supported fiscal consolidation, inflation moderation, and a benign current account deficit over the last few years are changing, thereby warranting an increase in interest rates coupled with exchange rate pressures. Amidst this, the IMF has pegged the Indian economic growth at 7.3% in 2018. Voltas' performance. Turnover for the current quarter is higher by 9% over last year, mainly due to improvement in the performance of project business. Product business was impacted by unseasonal rains in peak summer months of April and May. Earnings per share not annualized was at Rs 5.56 as compared to Rs 5.61 in the corresponding quarter last year, with a face value per share of Rs 1. Analysis of segment. We present below our detailed comments on the performance of the various business segments in which we operate. Segment A, Unitary Cooling Products. The performance of the products business was muted this quarter, mainly due to erratic weather conditions across the stronger northern and southern markets. As is well known, the room AC business is weather-reliant and, like the rest of the industry, dependent on an appropriately prolonged summer season to maximize sales volume. While sales improved in the month of June, industry degrew by around 11%. A decline in demand led to intense competitive intensity in the market, with higher inventory seen across channels. Notwithstanding this stiff competition, the Voltas brand has continued to improve upon its number one market position, increasing its market share to 23.5% in quarter June 2018 and 24.7% for June 2018, and continues to have the highest market recall. Better product range, extended warranties, attractive consumer offers, sensible pricing, impactful print and digital advertisement campaigns, and increased penetration through more than 15,000 touchpoints across the country have all contributed in sustaining this market leadership. As mentioned in our call of last quarter, the sales of inverter ACs have been picking up momentum. The company has also ramped up its product mix to gain market share in this space, with inverter ACs contributing to approximately 50% of the total split AC sales for Voltas. Our segment revenue stands at Rs 1191 crores as compared to Rs 1212 crores last year. Segment result was lower at Rs 149 crores as compared to Rs 171 crores in the corresponding quarter last year on the back of a poor season and intense competition. As a cost-conscious company, we strive to keep expenditures under check, although increasing competitive intensity, aggressive pricing, and depreciation of the Indian rupee continue to exert pressure on the business. A poor summer season affects the air coolers even more, as the window for sale is smaller as compared to the ACs. Despite the unsupportive weather, Voltas continues to be amongst the top 3 air cooler brands, owing to our increasing market presence, new product offerings, better features, sleeker designs, and competitive pricing. The commercial refrigeration business has seen an uptick in demand owing to addition of new corporate customers and concentrated efforts on channel expansion along with addition of new and customized products. Segment B, Electromechanical Projects and Services. Segment revenue for the year was higher at Rs 866 crores as compared to Rs 661 crores in the corresponding period last year, a growth of 31%. Segment result improved to rupees 88 crores as compared to rupees 35 crores last year, underlining the improved trajectory over the past several quarters. The increased margins are on account of better execution of quality orders, both in domestic and international business. In current quarter, some of these projects have also crossed the internal threshold, thus margins have been reckoned. International projects, having delivered turnkey electromechanical solutions and services for several prestigious and complex projects in more than 35 countries in a span of over 4 decades, Voltas is today the preferred Tier 1 MEP service provider in Middle Eastern countries like UAE, Oman, Bahrain, etc. With the uptick in oil prices and improved investor sentiment, the team is well poised to reap the benefits of its long-established standing as a preferred and trusted contractor. The company will continue to focus on labor productivity improvements and skills development, which is contributing to better execution. At the same time, we are conscious of the continued embargo in Qatar and are suitably booking orders in the region. The total carry-forward order book of international projects stands at rupees 1914 crores. Domestic projects. While keeping HVAC at its core, Voltas has strategically focused on government and government-funded projects, given the subdued pace of investment from the private sector. With the Indian government pushing the growth agenda, opportunities are increasing in urban infrastructure, including metros, malls, hospitals, hotels, etc., electrical distribution, and water treatment. Our focus on maintaining internal efficiencies remains. Our expertise in customer care solutions also opens up opportunities for ongoing maintenance service revenues. The focus in this division has always been on applying technology and expertise to engineer smarter, greener, sustainable, better connected, and energy-efficient solutions that can make a meaningful difference to lives. Our subsidiary RIEL, which turned profitable last financial year, continues to execute projects in rural electrification. Under Deen Dayal Upadhyay Gram Jyoti Yojana, a central government-funded scheme, the company has been instrumental in electrifying more than 2,000 villages across the country as a last-mile connector. The domestic order book now stands at rupees 2709 crores as of 30th June 2018, with additional orders under advanced stages of negotiation. Segment C, Engineering Products and Services. Segment revenue and results were rupees 77 crores and rupees 27 crores as compared to rupees 90 crores and rupees 26 crores respectively in the corresponding period last year. Due to subdued yarn prices and a steep increase in raw cotton prices, not only is the profitability of the spinning mills under pressure, but this has also impacted the investor sentiment. Despite these headwinds, the textile machinery division's thrust on both capital equipment sales and value-added after-sales services has helped us mitigate the risks of slowdown. For mining and construction equipment, while Mozambique operations continue to drive the performance, a gradual recovery appears to be on the horizon on the domestic front. Meanwhile, the focus on road development has led to an increase in orders in the crushing and screening equipment sector. Voltbek Joint Venture. In 2017, Voltas Ltd and Archelic AS agreed to establish Voltbek Home Appliances Private Ltd, a joint venture company in India, to enter the consumer durables market. The JVC will launch refrigerators, washing machines, microwaves, and other white goods and domestic appliances. Voltbek has during the past few months taken various actions, including identification of land for its manufacturing activities in Sanand, Gujarat. The 60 acres facility will manufacture refrigerators and washing machines in the first phase. The product launch plans are under finalization, and we propose to launch products within this festive season. We are confident that the complementary strengths of the two partners will help build a sustainable consumer durables business in India over time. In summer, IMF has predicted a growth of 7.3% for the Indian economy on the back of a strong rural pickup. While it is too early to predict the impact of the errant weather on the entire year's sales, we are looking forward to the festive season and the second summer. Longer-term prospects remain robust given low penetration levels, rising incomes, and several other supportive indicators. Additionally, our expansion into the bigger consumer durables category through the Voltbek JV holds promise. In the project space, we will focus on building a larger order book while continuing to pick up risk-mitigated projects. Needless to state, the strength of our balance sheet and the availability of cash surplus remains an advantage as we look at opportunities for growth. We are now open for Q&A.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The first question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yeah, a very good evening and congratulations on a great set of numbers. My first question is regarding the effective average realization increase in the AC segment, because we've seen 2 rounds of effective price increase. First was because of transition to the new BEE norms in January, which effectively led to some price increase in 3-star and 5-star ACs and so on. And second was the price hike that was rolled out somewhere in mid-May or towards the beginning of June. So what would have been the average realization increase per product for the quarter on a year-on-year basis?
Can you hear us? Hello?
Yes.
Your question is about the effective AC price realization increase, right?
Yeah, that's right.
One of the things that we have done during the quarter is that we have balanced the need for battling competition, taking on the increase in commodity price increase, forex expenses, etc., and have followed a judicious price increase mechanism through the country in different parts. So it's not a uniform across the board kind of price increase that we have done. But what we have done has not fully compensated the loss that we have got in terms of various commodity price increases, increase in marketing expenditure, forex, etc., etc. And that is why you would see that the margin that we have got on the unitary products business has depleted a little bit. Having said that, I would hasten to add that we have, at this point of time, been in the range that we have always indicated to you. Yeah? And so we'll watch the market as it evolves. I don't want to get into specific numbers and say this is the effective price increase that we have taken, etc., because this is a kind of a flexible market where we need to be fairly, quick on our legs in terms of what we do at various markets. But the end result is that we have been able to push up our market shares. As the note says, we have got to something like 24.5%, and we are also able to give you, at the end of the day, a margin, a very respectable margin of 12.4 or 12.5%.
Right. Okay, and so just a follow-up to that second question would be, there would have been definitely a lot of aggressive promotional activity that we would have seen during the quarter, which may not sustain in the future. So how much margin impact these activities create, which may not be there in the future, and hence you could gain that portion of margin back?
Look, this is a daily battle which is evolving at various regions through different competitions, different competitors looking at how to gain market share based on their own holding of inventory, what their working capital investment is, what their promises to trade and their internal management is, etc., etc. So, I can't really tell you that this is the margins that we will be able to maintain, but we definitely look at it at a range of 12 to 13% is the kind of margin that we have always talked to you about as being sustainable, as being something that we will be able to do, and it is our hope, it is our aspiration that we will be able to match up to that in any quarter where there are suitably higher volumes.
All right, sir. Got it. That's it from my side. Thank you so much for taking my questions.
Thank you. The next question is from the line of Venugopal Burger from Bunsen. Please go ahead.
Hi, thanks a lot for the opportunity. On one of the comments in the analysis document was about inventory being higher across the channel. Now, having said that, you also mentioned the June month sales improved. So now, looking at the current situation, how do we see inventory for our products in the channel, and is that going to, be something that you would want to watch for the next 1 or 2 quarters in terms of impact?
Well, as you are well aware, this is Abhijit Gajendragadkar. As you are well aware, in the month of April and May, the entire industry volumes fell because of somewhat erratic weather patterns which happened in large parts of the country. Particularly if you see the onset of summer in the Indian market, it starts in the southern market and then sort of proceeds upwards. And in the southern markets we had some unseasonal rains, etc., in some of the early parts of the peak selling season. So it is true that across the industry there is a little amount of excess inventory in the entire channel. Our estimates is that it would take around 2 months for this inventory to come back to normalized level. At the same time, we are also entering a period where there is some amount of festive season sales as well as second summer, which typically happens in many parts of the country. And we are hopeful that in these two occasions to sell, the inventory would also be used.
Okay. And secondly, on the project business, in terms of a margin range, given that it does tend to be volatile, given difference in mix as well as project margin recognition. So eventually it is still that 7-8% range that is the target range, or do we see it moving up?
No, we have always said in the project business that we should not be comparing margins of any one quarter because these tend to get impacted by a number of events which might be peculiar to that quarter. So the margin in the project business on a quarter to quarter does tend to be a little lumpy at times, moving both ways. And if you have followed our company, you would have seen that. Over the midterm, we are, as we have been guiding you, our endeavor is to meet a margin of around 7 to 8%, and I think that is something which remains unchanged.
I just want to come in at this point of time and just mention that over several quarters we have been informing you about the various measures that we have taken to render a greater sense of robustness to our projects business. And that has been by a series of management moves in terms of execution, in terms of better buying, in terms of better management, labor productivity, etc., etc. But more importantly, we have been selectively taking orders and have been on a risk mitigated basis and have passed those orders through a very tight funnel in terms of whether we should take these orders or no. So now what you're seeing is the proof of the pudding of the action that we have taken over these very, very many, maybe 3 or 4 years that you are really seeing. Having said that, I hasten to add that, as you rightly noted and as Abhijit also commented, projects business does tend to be a little lumpy. When, for example, when we don't reckon margins on projects till they complete 20%. So in a quarter where a substantial project crosses 20%, you will suddenly see the benefit of the margin. Yeah? Or vice versa, depending upon any techno-commercial audit or depending upon a settlement that we are able to engage in with the main contractor. So the advice that I would say is that 10.2% that you see in this quarter is not the general thing that you would expect in the next coming quarters. It would be still in the range of around 7 to 8%, which we have always told you is the longer term sustainable margin for the projects business, and which is something that we are fairly confident that we will be able to attain, other things being equal.
Thank you. The next question is from the line of Jay Kakkar from Haitong Securities. Please go ahead.
So thanks for taking my question. So just wanted to understand this accounting change which you have made. So this is impacting the net worth by 131 crore, which is what you mentioned. So this change, does it impact anything during the quarters in future, or can we bifurcate this into say the impact on each segment? Is there any impact of this?
As I think we have mentioned in the note, we have taken an adjustment of about 30 crores in the retained earnings, and also for this quarter the impact is negligible, and that is well spelled out in our note. This primarily has arisen, as you know, because under Ind AS many of the assets are now reclassified as financial assets, and that has required us to apply the an expected loss credit model on many of these. So these are, in a sense, provisions which are or also catch-up sort of adjustments that we have done. And on a going forward basis, it would be we would review this every quarter. And depending on, and of course with the good pace of collections, and I think as Mr. George had mentioned, the choice of projects and the pace of work, etc., every quarter we would assess the impact.
Okay. So if the collections is stronger, then this could actually reverse in future.
Yes.
Hello?
Yes.
Yeah. So second question is on sourcing. Sir, if we look at the annual report, you're buying from your subsidiary, which is Universal Product, from where you buy ACs. That buying has declined by 20%. So is there a change in the sourcing strategy? And also wanted to know the forex that we use, which is we've used around 900 crore forex last year. Is it mainly to do with UCP segment?
Yes, the forex is primarily to do with the unitary cooling product segment. As we have said in our earlier calls, there are certain raw materials and components that we source from abroad, particularly high-value components such as compressors and some of the other indoor units for certain models. And these are sourced from China, and that is what you see as imports in the profit and loss account. As regards your question of UCPL, I don't know what gave you the impression that it has dropped. I think you must have looked at the turnover of UCPL as compared to the previous year.
I looked at the related party transactions between standalone and UCPL.
So it has dropped in the period, but that's also dependent on one or two things. It's dependent on the mix of products that we source. It depends on, some of the products we will buy on a completely bought out level. Some products we will probably source from UCPL. So it will vary from a year to year. And I think that is the nature of the business and the nature of how we run this business. One of our endeavors is to also run a very efficient supply chain.
Of course. Thanks so much for answering the question, sir. Thank you.
Thank you. The next question is from the line of Rahul Ji from Antique Stock Broking. Please go ahead.
Good evening, sir.
Sir,
the
good evening.
Question, yeah. Sir, the first question is, in the UCP division, you had a revenue decline of...
Clearly audible. If you're on speaker, please turn that off.
Is this better now?
Yes, thank you.
Yeah, okay. Sir, in the UCP division, there is a revenue decline of 1.5%. Now, is it possible you can break this up into, the decline that was there in the room AC business and the cooler, That is the first question. And the second question is, what was the order intake and the breakup between domestic and international?
I think as regards as the breakup between the various products, I don't think that is something that we give out every quarter. But you can assume that the decline of the 1.5% that you have said is indicative of the various products in the category.
Yeah. I'd just like to come in here and mention that overall, on a basis of for the air conditioning industry as a whole during the quarter, there has been a decline of something like about 10 to 11%.
11%
is our estimate. Okay, some of our competitors have quoted even higher numbers, but we think that it would be in and around 11%. Now, in that, we have actually grown strongly in terms of the air conditioning business, but air cooler, given the time window that the industry had because, once the rain starts, then no one buys air cooler anymore. And generally, the air cooler industry has suffered this quarter because we have not been able to, just as some of our other competitors' results also, which you would be privy to, you would see that there has been a decline in the air cooler segment.
Okay. Fair enough. Sir, regarding the second question, the intake and the breakup between international and domestic.
That is stated in the write-up that we have given. The order book, current order book is about 1,914 crores national and about 2,700 crores in the domestic project business.
Correct. So what I was looking for was the order intake in this quarter. I think the order intake should be closer to 400, but I was actually looking at the breakup, The
order intake is about 250 in international and about 150 in domestic. So you're right about the 400, roughly in that order.
Sure. Fair enough. Thank you very much.
Thank you. The next question is from the line of Srinidhi Karlekar from HSBC. Please go ahead.
Hi. Thanks for the opportunity. So I just wanted to know your view on this inverter AC market competitive intensity. So do you think structurally this category would be much higher competitive compared to fixed speed and windows because some of the MNCs due to their global presence have a relatively favorable cost economics?
Wouldn't be able to. I think this, I would say that the inverter AC product category is as competitive as the entire air conditioning industry because some of whether someone is more competitive or someone is selling more depends on the kind of product strategy that each company has chosen. We are in the inverter AC segment as you would have seen. As we have mentioned in the call that the pace of inverterization has picked up substantially and inverter ACs today are around 50% of our total split AC sales in the quarter. In terms of our product range, I don't think we have the entire product range and in fact we have the widest number of SKUs in the inverter AC range. And plus we have been able to source technologies both internationally and locally for the purpose of the inverter AC segment. So I wouldn't agree that the competitive intensity is any higher or lower as compared to the other markets. Other types of air conditioners.
Fair enough, sir. And sir, second is now that you have a full range of inverter ACs, does that open up some of the institutional AC markets such as restaurants, small offices and hospital? And I'm presuming that the Voltas market share in this segment is relatively low. And would it be possible to give some color on this? How big is this market?
Well, we have been catering to this market in any case, I think through both our fixed speed AC as well as our inverter AC products. And we have, in fact, within our sales setup, we have teams which are focused on this category. And we also participate in the larger tonnage that you mentioned, restaurants. But in our domestic project business, we also participate in some of the larger tonnage air conditioning projects because at this level, these projects tend to be a mix of both sale of a product as well as installation, and in many cases also an offer of a customer care continuing for a certain number of years. So we are able to straddle the entire segment, whether it is a larger tonnage AC or a room air conditioning.
Okay. Last one, if I may.
I'm sorry to interrupt, but maybe request you to come back in queue for follow-up. Thank you. The next question is from the line of Nitin Arora from Axis Mutual Fund. Please go ahead.
Hi, sir. Good evening. I'm sorry I joined the call a little late, so I don't know whether it's got discussed or not. So when we look at your UCP segment, the AC, which showed a decline of about 1.5%, is it possible to share how much the commercial refrigeration a growth or a decline year-on-year was, and what was the AC volume decline or growth on that number versus the industry, which your competitor also stated just recently in the call? That's my first question.
I think, I don't know if you were there in response to our earlier question. We have mentioned that that the AC industry in general faced a number of headwinds during the quarter because of the errant weather and other impact of the season. In this environment, we have grown our market share. Our market share is much better as compared to the same period last year. And for the quarter, our market share stands at 23.5%. We have also said that the poor summer season affected the sale of air coolers even more since the window for sale for air coolers is much smaller as compared to ACs. The case of commercial refrigeration, we have seen an uptick in demand, but this business is a B2B business, which is, there are times when it tends to be lumpy because if you get a very large order from a very, very big institutional customer, then in that quarter the volume of sales goes up. So I would say that we have improved market share in ACs. Our air coolers have been affected, and commercial refrigeration tends to be lumpy. That would be the answer to your question.
Okay. Second thing, sir, just lastly, because of this India's change, we saw your competitor lowering his segment results or the revenue of the last year, which came on the higher side in the Q1 FY19 numbers because of the change from the delivery to the shipment, what he explained us. Did you witness any of that change? Because we don't see the change in your segment numbers.
You are saying the change in the segment numbers for last year?
Yeah.
So the last,
because of this India's?
So I think in the India's accounting standard, under the accounting standard, there are two approaches that one can adopt. So we have adopted what is called technically as the modified retrospective approach. So that is what we have adopted, and I think that does not require us to change the financials of the previous year.
Got it. Thank you very much, sir.
Thank you. The next question is from the line of Ashish Shah from Goldman Sachs. Please go ahead.
So thanks for taking my question. Sir, considering that there is some inventory in the system, would you be willing to support or would you give any support or incentive to the dealers as they would have to keep inventory for a few more months?
No, listen, this kind of inventory going up and down in the trade is part and parcel of business. The dealers also understand it. The company also understands it. There are good days, there are bad days. And I don't think that we will want to, just because there is some extra inventory, we go out of the way and start compensating that for, it becomes a difficult thing and it also sets a precedent. So we would not go that route. And at any rate, it is not that it is something, the inventory in the pipeline is so very exceptional. No, not at all. Yeah, it is reasonable and within the parameters that anyone would expect a dealer or a distributor to take. So we are not looking at any separate compensation for that.
Fair enough, sir. Sir, my second question is on the BECO JV. Sir, have we expensed anything on the P&L because of JV, or is it in the associate income? And what would have been the negative impact if there are any expenses related to that JV?
I think if you see that in the JV, this JV is a joint venture. So in a sense, we do what is called as a joint venture accounting, which means we do a single line consolidation of 50% of the profit or loss of this JV. And for this quarter, the number is very, very small. I don't think it will make any much impact to the financials.
Okay. Thanks a lot.
Thank you. The next question is from the line of Abhineet Anand from SBI Cap Securities. Please go ahead.
Yeah, just on the Volt BECO JV, apart from the capex that we have, earlier highlighted and all, for the current year, what would be the ad and market spend that you guys anticipate, apart from the capex that we have said earlier?
Hello?
Hello. Can you hear me?
Hello? Can you hear me?
Yeah, I can hear you.
So I don't think it would be possible for us to give any figures for the JV in terms of the specific question to your ad and marketing spend. We have commented that our aspiration is to have a significant presence in the Indian marketplace over a period of time, and obviously we will be launching products in the coming festive season. So we will do all that it requires to support these products. And as with any new product launch, there will be marketing cost and the related cost to ensure a successful launch.
Yeah. See, let me try and answer that separately, and also say that, these questions are a little difficult to answer, because it would really mean that I'm going to tell you that so much is going to be spent on my marketing spend on a public this thing. It becomes difficult. So I please request that you don't go there. These are part of our own strategy in terms of how to launch, how to do that, and we will spend what is required, and we will make sure that the launch is successful.
Okay, appreciate that. Secondly, in the segment 2, which is the projects part, do you see that general elections and elections of some of the other states that will happen will impact?
Yeah, I'm not able to hear you very clearly. I think you moved away from your phone, maybe.
Sorry. Can you hear me now, sir?
Yes.
What I was saying is that with general elections, at the end of maybe FY19 and some other states having the elections, you see some impact on inflows for segment 2?
Well, we are not seeing it immediately, but we would also estimate that there would also be a certain amount of spend which the government agencies would do, and I think so far as we are concerned, our projects are in a sense longer term in nature. If you see, part of our project is in rural electrification, part of it is in terms of urban transportation, which is the metro rail projects. So I think these are really longer gestation and longer term projects for which we see some of the contract awards going on in the normal way.
Okay, thanks for answering my questions.
Thank you. The next question is from the line of Anupam Gupta from IIFL. Please go ahead.
So this first question is on the UCP segment. So what is the like-to-like comparison in terms of revenues, because 1Q FY18 was pre-GST. So what is the like-to-like number for that in terms of revenue?
About 7% higher, I would say, as compared to...
So revenue growth will be 7% effectively if you do like...
So if I can take it, if you take it last year, we have said that our growth, there are two ways to measure it. If you take it in the way that we have said it in our financials, our increase for the company would be about 10.08% if you take the, as against about 9% if you take the impact of excise duty.
And specifically, majority of that would pertain to UCP, right?
Yeah.
Okay. And secondly, can you talk a bit on the project business order inflow outlook? So have you seen any uptick from the commercial and private side in terms of inquiries, apart from the government which is there?
We have, in a way, said in our earlier calls that our focus in the domestic project business has been to focus on projects and to focus on government business, because we see a spend in the government projects, and we had for the last few quarters seen that the spend from private projects was not happening to the extent that one would have liked. I think that situation continues to a great extent, and we still see that that the spend from government is where we are focusing on, and we continue to focus on that in this quarter.
Okay, understand. Thank you.
Thank you. The next question is from the line of Ranjit Shivram from ICICI Securities. Please go ahead.
Yeah, hi sir. Congrats on a good set of numbers given the overall environment. Sir, I just wanted to understand, did we do any price hikes in our room AC division for the quarter?
I think Mr. George has mentioned in response to one of the earlier questions that we have been judicious in our price hike, in a sense that we have taken price hikes in certain products, in certain categories of product, and in certain regions of the country, depending on the local market conditions and depending on the local competitive intensity, which at times can be different from the overall all India product intensity. So we have made some adjustments to the price during the quarter.
Okay, and under the project division, was there any major project closures, and because of that we made provisions and provision write back? This is in the normal course of business. Was there any major provision write back, some action like that which has led to this kind of margins, or there is nothing?
Yeah, we have mentioned in our write-up that in the current quarter, as you know, and I think as Mr. George had mentioned in response to another question, that we have some internal thresholds for reckoning margins on our projects business. And in the current quarter, some of the projects that we are currently working on have crossed this internal threshold, and therefore we have started to recognize margins on these projects, and that has been one of the reasons. In addition, as I think we have said on many of our past calls, our focus in the project business has been to look at risk-mitigated projects, to look at which projects we work on very closely, and to do an extensive risk assessment prior to signing on to projects. And in also focus on efficient execution of the projects that we are working on. I think it's a combination of all of these which would have led to the margin.
But there is no major exceptional or a particular project which is closing, and because of that it's just a normal course of business kind of a margin.
But the normal course of business in the project-based understanding of how business is carried out.
Okay. Thank you, sir.
Thank you. The next question is from the line of Ambar Singhania from Asian Market Securities. Please go ahead.
Hi, sir. Thanks for taking my question. Just one thing is, I wanted to know, as we have already seen a tough summer season this quarter for the entire industry as such, going forward, how do you see the business and the industry panning out in the room AC side for this year? What is your outlook on that part for the entire industry growth as such? And secondly, I would like to know the breakup of domestic and international order book. Domestic per se, how much is water, how much is rural electrification, how much is on the HVAC, and international is geography, if you can share that.
In terms of your second question, in terms of the breakup of the order book, we would be able to give it to you later. In terms of your first question, I think we have said that our like many of the industry players, our long-term growth forecast for the air conditioning industry continues to be robust, particularly since the low penetration levels and rising income and a number of other positive factors which would over the longer term contribute to the growth of the business. In the short term, we are also, as we have mentioned in response to an earlier question, we are also hopeful that the second summer, which is prevalent in many parts of the country, and the oncoming festival season would be opportunities for us to sell ACs and to some extent probably make up for some of the issues that we had faced in the first 2 months of the year.
So would it be fair to assume that we can see industry growth this year, or it will be more or less flat? What is your sense on that? Just wanted to understand.
The first quarter for the industry has been a negative of something like 11%. And this is supposed to be traditionally a very strong quarter for the industry. Exactly. So that being what it is, it is unlikely that the industry as a whole might grow this year. I don't know, depending on how January, February, March offtake happens. But having said that, one of the things that you would have noticed is that within whatever is happening in the industry, we are able to consistently do better than the competition and inch up our market shares.
So just one clarification.
I'm sorry to interrupt. Maybe request you to come back in queue for any follow-ups. Thank you. The next question is from the line of Aditya Bhartiya from Investec. Please go ahead.
Hi, good evening, sir. So the UCP margins, which have declined by almost 160, 170 basis points this quarter on a year-on-year basis, just wanted to understand, could you break that up between possibly gross margin decline and the impact of fixed costs not properly getting absorbed this quarter?
No, will not be. No, I don't think we'll be able to do that. That is something which we don't share.
Okay. And so for the UCP segment, what we notice is that while assets have risen, which possibly would be on account of inventories that you spoke about, even liabilities have increased by a fairly sharp number. So what is that on account of? And should we be expecting longer payment days going forward as well?
It is also the creditors in the normal course of business, because I think it also is a function of the payment terms that we have agreed with our suppliers. With some of our suppliers, we're able to agree payment terms which are anywhere between 90 to 120 days from the date of supply, and that would also be something that would be sitting in the creditors' book.
Exactly. So I just wanted to understand that have we been able to extend those payment terms vis-a-vis what we used to have earlier?
Oh, I think this has been a normal part of our payment term that we had agreed. I don't think we have specifically extended the payment terms.
Okay. And lastly, sir, just a clarification. What was like-for-like revenue growth that you spoke about for the UCP segment this quarter?
We answered that question, and is also in a note to our accounts. So I think we have said that for the company, we are saying that the revenue growth would have been 9%. That figure would have been 10.08 if we had taken from a like-to-like basis.
Sure. Understood, sir. Thanks.
Thank you. The next question is from the line of Sandeep Tulsian from JM Financial. Please go ahead.
Yes, sir. Thanks for taking my follow-up questions. I have two questions. One is pertaining to the currency movement. Although we've seen a sharp depreciation in INR versus dollar, at the same time, we've fairly appreciated against yuan. So how are the contracts based with the procurement that we do from China? And if these contracts are yuan denominated, probably the impact wouldn't have been much in terms of input price increase.
Our contracts are based in US dollar, which is the normal international trading currency. And I take your point about the yuan and dollar.
Okay. All right. And the second question is, given that our volumes are now significantly higher, 1 million plus kind of ACs that we do sell in India annually, what is the plan going forward on indigenizing some of the components that we procure from other countries, and what kind of reduction can we bring about in the import content from whatever 55-60% where it is right now?
I think we have ongoing plans for indigenization for more reasons than just the cost, and it is also in a way to build flexibility in our supply chain to be able to bring down the raw material inventory. So there are a number of things and a number of advantages. So there are, for example, we have invested, as we said earlier, in some of our molds for indoor units. So rather than getting indoor units imported, we would be manufacturing indoor units locally based on the molds that we are building right now, and some of those are already being productionized as we speak. There are also components in terms of controllers, etc., which is a key component for the inverter AC, where again we are looking at alternative supply sources within India. There are also some of the global suppliers from whom we source some critical components. Some of these suppliers are also looking at setting up facilities in India. So that would be another source of supply for us in the coming future.
So how much can it come down to on a maybe 3-year basis or a 5-year basis?
It would be difficult for me to state a number as to how much it will come down to in 3 to 5 year basis.
Okay, all right. Thank you so much.
Thank you. The next question is from the line of Fatima Pacha from ICICI Prudential Life Insurance. Please go ahead.
Hello, sir.
Yeah, hello, good evening.
Good evening, sir. Congratulations on good numbers, sir.
We are unable to hear you. I think there's some echo in the line.
Hello?
Yeah. Yeah, go ahead.
Yeah. So I just wanted to understand, like we spoke to some people in the industry and they said that China for the first time last year had a growth in the AC demand. So as a result, the Chinese surplus market, the Chinese AC manufacturing surplus is likely to shrink. Is that true? And are you seeing inflation in AC, prices or procurement costs out there?
Sorry, Fatima, we were not able to actually hear you properly. Can you talk a little?
Ma'am, your voice is breaking.
Hello?
Yeah.
Yeah, we got to know that China had a surplus, China grew its AC demand last year, first time in many years. And are you seeing any inflation in the procurement prices for ACs? Because at the margin, that surplus will shrink.
What you're asking, if I could just repeat this thing, you're saying that you spoke to some of our competitors and understand that China had a bumper market for ACs last year, and therefore there is certain pressure on the input prices that are being quoted at this particular point of time. You are absolutely
Exactly. Yeah.
You're absolutely right. There is a pressure on the prices, and this is the cumulative effect of many of these things is what is also reflected in the margin change that we are seeing. But again, very importantly, we have been able to, despite all of these things, we have been able to balance the margin change with the growth in the market, and therefore growth accompanied by margins within the range that we have always been talking to you about.
You don't see, I'm saying a year or 2 years later, do you see that you would have to significantly shift the sourcing to India or something like that?
I think there are a number of factors at play. In response to the earlier question, I said it is not just about China and, it is about, China capacity getting constrained. I think that is one of the factors, but as I mentioned earlier, there are new sources opening up in India. There is a move to indigenize for various reasons. One is cost reason, other is efficiency reason, ease of supply reasons, etc. There are several projects which are coming up in India itself. So you will definitely see that from time to time we will look at in terms of making our supply chain more lean and more efficient, and these efforts will continue.
Fair enough. Fair enough, sir. Thank you so much, sir.
Thank you. The next question is from the line of Ankur Sharma from Motilal Oswal Securities. Please go ahead.
Yeah, thanks for the opportunity and good evening, sir. My first question was on the projects business, where we've seen this sharp 31% growth, on sales. So is this more of a function of the growth in your order book last year, which was up some 20% YOY, or is there, and therefore more importantly, will this sustain, or was this more of a one-off quarter in that sense?
We have indicated that the sustainable kind of margin that we see on a longer term basis will be of the order of about 7 to 8%, and that's what we will aspire to. In the project business, it tends to be lumpy depending upon how many projects we have closed in a quarter, how many projects have crossed the 20% benchmark for reckoning margins, etc., etc. So, generally, as a matter of looking into, some of the projects could be progressing on a faster pace depending upon what is the time duration for those projects. For example, some of those projects that we have taken up for a particular event base could mean that it has to be completed much faster and the execution will also move at a much faster clip than before. So all of these things really build in to really give you the higher turnover that we are seeing now. And we hope that it will be maintained at this kind of an order, but we have to do something about our order book also. We have to grow our order book to be able to sustain the pace as we go along. That is something that we have commented upon in the note as well.
Okay, understood. And so my second question would be on the Pico JV. Now, we were reading in one of the media articles that the launch was planned from August onwards, and do a nationwide launch by Diwali. So, are you broadly on track on that? And if you could also specify which regions are you looking to do, at the launch initially, and then move pan India?
So I wouldn't like to comment on that launch. I would like to, keep our, business priorities a little secretive at this point of time. Broadly, we could say that we are largely on track, and we are going ahead as we had planned earlier the year.
Sure, understood. Best of luck, sir, and thanks.
Thank you. The next question is from the line of Abhishek Puri from Deutsche Bank. Please go ahead.
Thank you for the opportunity. In the UCP business, last quarter you mentioned about the secondary sales was up 18% for you, inverter was 30% of overall sales, and the industry inverter was 40%. Can you give us the similar numbers for the current quarter, sir?
This is, you are asking secondary sales, right?
Yes, sir.
So the secondary sale for the industry is about 50, and our share would be about 40%.
This is for inverter AC. And as your secondary sales, overall growth for room AC?
Sorry?
Overall room AC sales growth for you. It was 18% in the last quarter, you said. How much would that be in the current quarter?
The room AC sale growth was roughly around 6%.
Great. So my second question is on your cash utilization plans. I think you've been accruing it for the last couple of years and have invested into FMPs before that. Are there any acquisition plans, and that's why you are keeping such a high cash level in the balance sheet right now? Especially when we see in the last annual report that Voltas has invested 154 crores in LMW, Lakshmi Machine Works, I think, to increase your share to almost 5.3% now.
Well, I don't think we have invested recently in LMW. LMW has been a shareholding which we have held for a very long time, for a number of decades, if not years. And that is part of the relationship that we have had with LMW, where we represent LMW and some part of our textile machinery revenues and profits come from this business. So this is something which has been ongoing. I think if you are talking about the amount of 100 crores or something like that, like we do mark to market of mutual funds which goes to the profit and loss account, the mark-to-market of our long-term equity investment goes through other comprehensive income, and that may be the reason why you have seen the figure what you've seen.
Okay, got it, understood. And if I can ask on the other current...
Maybe request you to come back in queue for any follow-up. Thank you. We will take the last question from the line of Gopal Navandar from SBI Life Insurance. Please go ahead.
Hello.
Yeah.
Yeah, sir, this change in the inventories of 310 crores in the P&L, and this is largely on account of AC inventories which we are carrying, or?
Well, it will be a combination of the AC inventory, and we have talked about the reasons for that earlier in the call, as well as the project inventories depending on the stage of billing of the projects.
Okay. And second thing on this ECL related provisions, I just wanted to understand, like, we debited this into the reserves, and when these provisions reverse, this will come through P&L, or this will be, again adjusted in reserves?
As far as our understanding goes, this will come through P&L.
Okay, and so did we see saw any reversal of these ECL in this quarter?
Typically, how this operates is that, you make provisions based on what your project assets are at any point of time.
Right.
Basically, it's a difference which comes through the P&L. So, it's not a one-to-one comparison. It's the position at a point of time.
Okay. Got it. Okay, sir. Thanks a lot.
Thank you very much. That was the last question. I now hand the conference over to the management for their closing comments.
Thank you, everybody, for attending the conference. In case you have any more questions, you may please write in to us and we will be able to reply. Thank you.